Hey everyone, welcome back to Corporate Decoder. Today, FVR just filed their current report, and I am seeing information that sheds light on their latest financial results. Quick note, this is not financial advice, just my take on public filings for educational purposes. They just released their second quarter earnings, and we're diving into the key numbers that actually matter. Alright, let's get straight to it. FrontView REIT Incorporated, or FVR as you know them, has filed their 8K report. This is essentially a snapshot of important events happening with the company. The main reason for this filing is to share their financial results for the quarter that ended back on the 30th of June 2026. They put out a press release to announce this, and that is included as an exhibit with this filing. Think of it as their official announcement to the public about how they performed. This section is a bit of a catch-all for disclosures that need to be made public. In this case, FrontView REIT made available on their website some updated information and presentations. This includes supplemental information for the quarter ending the 30th of June 2026 and an investor presentation they likely used for their earnings conference call. It is all about transparency, making sure everyone has access to the same information. They're being clear that this information is furnished, not filed, meaning it is for awareness and not part of the formal regulatory record in the same way as other filings. Now, the really juicy stuff is in the exhibits they've attached. The press release from the 6th of August is where we'll find the actual financial highlights. While the filing itself doesn't lay out all the numbers in detail, it points us directly to where we can find them. This is typical for an 8K, it acts as a notification and a pointer to more detailed information. This is the kind of document that gives us the nitty-gritty details. It is the supplemental information, meaning it goes beyond the basic press release and offers more in-depth data for a real estate investment trust or REIT. This would typically include details on their properties, rental income, operating expenses, and importantly, their funds from operations, or FFO, which is a key metric for REITs. The investor presentation is usually a summarized version, often with charts and graphs, highlighting the most positive aspects of their performance and future outlook. It is designed to be easily digestible for investors and analysts. Let's look at what we know about FrontView REIT, or FVR. It is a diversified REIT with a market cap around $588 million. They've had a pretty active stock price in the last year, trading between about $11 and $22. Institutional investors like FMR and BlackRock hold significant stakes, showing that larger players are keeping an eye on them. Recent headlines mention expectations for their Q2 2026 earnings, and even a rating upgrade in July, which suggests some positive momentum heading into this report. While this 8K doesn't contain the detailed financial tables, the attached exhibits, particularly Exhibit 99.1, the press release, and Exhibit 99.2, the quarterly supplemental information, would contain the key numbers. For a REIT like FVR, we'd be looking for metrics like revenue from their real estate operations, net income, and critically, funds from operations, or FFO. FFO is a much better measure of a REIT's operating performance than traditional net income because it adds back depreciation and amortization, which are non-cash expenses, and excludes gains or losses from property sales, which are not part of a REIT's core recurring business. For instance, if their FFO per share showed a significant increase compared to the previous year, that would indicate they are generating more cash from their existing properties and new acquisitions. Conversely, a decrease might signal rising operating costs, lower occupancy rates, or challenges in their property portfolio, given that their stock has seen some volatility. Understanding these FFO trends will be crucial for assessing the company's health. We also know they are classified as an emerging growth company, which means they have some flexibility in reporting standards. This also means they might be using extended transition periods for new accounting rules, which could impact how their financials are presented compared to older. More established companies, looking back at their first quarter earnings announcement in May, they had updated their full year 2026 guidance. We'll want to see if this latest quarterly performance puts them on track to meet or exceed that guidance. Any deviation here could signal potential headwinds or tailwinds for the rest of the year. The fact that they're providing both supplemental information and an investor presentation tells me they want to give investors a thorough understanding of their Q2 results. This often means they're either proud of what they're reporting and want to emphasize it, or they're trying to provide context for numbers that might otherwise look weak. We'll have to see what the actual numbers reveal. The risk I'm watching is how their property portfolio is performing in the current economic climate, particularly given interest rate environments that can impact real estate values and financing costs. What I am actually looking for is sustained growth in their core FFO generation and clear signs of strategic expansion or property enhancement. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.